Very good evening. You've joined us right here on Business Day. I'm Tanya Bharadwaj in Mumbai. Let's take it straight to the markets. A strong start to the week on the Lal Street. Both the Sensex and the Nifty jumping around 2% apiece, largely tracking with the gains we saw in the Asian markets. But it really were aviation stocks that stood out in trade and outshined. Tanveer Gill is here with a wrap of the trading day.
Well, it was a good session for the market. We closed at pretty much the high point of today's trade. So 5,200 was on the index. The futures, in fact, closed higher. There was broad-based participation that was reflected in the market. But we could have bargained for better turnover, but traditionally, second day of a new series, we do not see that much by way of broader market participation in terms of volumes and overall turnover. However, in the session, all the index heavyweights were up. There was strength in Reliance Infrastructure. The 80 group of stocks saw good price and volume activity. There was also a lot of strength that came in from banks. Some of the mid-tier banking names came out with a decent set of numbers, but even the frontliners did extremely well in trade. Then you have BHEL, Tata Motors, the stocks which have been riding high, except for barring, in fact, an Ambuja Cement. All the other stocks managed to close higher. That was reflected in the market breadth, and that was also reflected in some of the mid-tier banks, which were in focus, the likes of a Syndicate Bank and Allahabad Bank, Dena Bank, Oriental Bank of Commerce. These were some of the companies, banks actually, that came out with numbers, Bank of Baroda for that matter, and the stocks saw good price and volume activity. Must mention SpiceJet and Jet Airways. SpiceJet came out with a phenomenal set of numbers, and that had its drop off on Jet Airways as well. There is, of course, just a sense in the market to keep an eye out for these stocks. For SpiceJet in today's trade, the run-up was significant, 20% plus coming in by way of performance. Pantaloon retail did well, sugar stocks were active, and so were fertilizer stocks. So momentum also played its part in the market session. Remains to be seen whether we can actually sustain the rally at these levels. But for now, it seems like the second day on the trot, the market was able to keep its momentum on the higher side.
All right, Tanveer, many thanks for that update. Meanwhile, aviation stocks, as Tanveer was saying, really posted smart gains, led largely by SpiceJet, that soared close to 22% after the budget carrier posted a surprise quarterly profits. PAT came in at about 56 crore rupees. Just compare that to a loss that the carrier made last year. And other income component really of about 12 crore rupees is what's helped the company's performance. But let's take it across to our research analyst, Megha Memoria, who's here with a wrap on the performance.
Well, SpiceJet posted an exceptional set of numbers at a time when the street was expecting the company to post a loss at the PAT level. They came up with a profit of close to 56 crores there. Also, what's noticeable is the fact that they posted a profit after 5 consecutive quarters of losses. If you look at the numbers there, the sales have increased by 51%, touching close to 1,400 crores. Now, what contributed to the increase in sales is the fact that the company's market share has increased to close to 18.6% in this quarter versus 17.1% in the previous quarters. Definitely the increase in market share was aided by the decline in operations of Kingfisher Airlines. If you look at the cost structure, there's sharp decline in cost has come in for Jet Airways there. The fuel costs have declined to 47.6% as a percentage of revenue versus 54% in first quarter of FY12. So sharp decline in cost is what has contributed to company's profitability. Other numbers are also very encouraging. The domestic passenger growth has been 26% on a year-on-year basis, and the average revenue per passenger has increased by 24%. Now, in anticipation of good set of numbers being posted by SpiceJet, the market is anticipating a very strong set of numbers to come in for Jet Airways, which posts its first quarter numbers on Friday there.
All right, Megha, many thanks for that. More earnings and some key mid-cap banking earnings came out today. You have Bank of Baroda, IOC, OBC amongst others. Our research analyst Poonam Sani joins us live from our Mumbai newsroom for all the number crunching. Tell us, Poonam, how did all these banks stack up against each other?
Well, the Bank of Baroda, the major PSU bank, that reported a profit growth of close to 10% on a YOY basis at 1,139 crores on the back of a good net interest income growth as well as an other income growth of close to or above rather 20% YOY. Again, the asset quality for the bank has deteriorated a little bit on a sequential basis in terms of the gross NPAs. However, if we look at the breakup, the slippages in the first quarter have been lower than the fourth quarter slippages. Also, if you look at the restructured accounts just stand approximately at 700 odd odd crores versus 5,200 odd crores in the fourth quarter. So some improvement is seen definitely in the asset quality front, and the management does say that the asset quality will improve largely going forward, as well as it does expect a recovery of close to 500 crores in the next second quarter as well as third quarter. Remember, the FY12 recovery itself stood around 500 crores. So substantial recovery is expected by Bank of Baroda. In terms of Oriental Bank of Commerce, very good set of results in terms of the asset quality. Asset quality for this bank has improved. The gross NPA stand at 2.9% versus 3.2% in the last quarter. Also, the PAT growth was above estimates. Largely because of a moderate growth in the net interest income, and also that the PAT was boosted by higher recoveries in this quarter. In terms of Allahabad Bank, the PAT was above estimates. It reported a PAT of 23% growth. However, the core operating performance was definitely muted. Margins have declined, as well as the asset quality has deteriorated QOQ. In terms of Indian Overseas Bank, below core operating performance, NII has been below estimates, other income has been below estimates, also the asset quality has deteriorated. Back to you.
Right, Poonam, many thanks for all that number crunching. Poonam Sani there joining us from our research desk in Mumbai. The Reserve Bank of India, meanwhile, will declare its first quarter monetary policy review tomorrow, and as inflation management has taken top priority at the RBI, a majority of the market isn't too optimistic of any sort of a relaxation from the central bank. ET Now's Simran Gill polled treasury managers across 20 banks, and here she is with the findings.
This time around, most people are expecting this policy to be a non-event, and ET Now poll suggests that majority is not expecting a cut, be it in the policy rate or the CRR. And of course, this comes at a time when there are strong signals emerging from the central bank that controlling inflation is the topmost priority. And most people also expect that RBI would cut close to 50 basis points going forward in FY13. And we of course spoke to a couple of bankers who have been clamoring for a cut in CRR for some time now, and some of them have clearly stated that a cut in CRR is an effective policy transmission and will help in bringing down interest rates more than what a policy rate cut will do. So with liquidity deficit being in comfort zone, how much of a strong case does a CRR cut really form at this point remains to be seen. And as far as inflation is concerned, monsoon continues to remain spoiled sport, and with some of the states where the deficit is running over 50%. So certainly most expect that there will be an upward pressure on inflation, and it would be somewhere in the range between 7.5 to 8%, way above the RBI's comfort level. And of course, as far as other measures are concerned, be it on the rupee or any other issue, most do not expect any major announcement coming up in this policy. So will this policy really be a non-event, or whether the governor will throw in a positive surprise, we'll have to wait until tomorrow.
And as Simran was saying, there isn't much of a consensus when it comes to top bankers on what it is that the RBI will do tomorrow. Most of them are hoping for some sort of a relaxation, but many aren't very optimistic.
For CRR cut, I think last time they skipped, so there is a strong case for a CRR cut. And global, I think the monetary authorities have taken upon themselves the task of rejuvenating the economy, and one thing they can contribute by moderating the interest rates.
The liquidity situation systemically has improved substantially. So as far as the the policy rates are concerned, I guess RBI has made it very clear they're going to balance whatever is happening with regard to inflation, growth and so on.
Considerations for a CRR in terms of liquidity injection are far, I would say, abated. I think on the repo and reverse repo, it's anybody's guess. I somehow get the message that there may not be much of a change.
We are expecting a cut in both the rates, especially the CRR, to some extent, which is basically, though the liquidity is not very big issue at this moment, but I think it will certainly decrease the cost of resources.
As usual, RBI should be in a position to support the liquidity required for the credit growth. As regards rates are concerned, I don't think I have anything to predict. It's the RBI who will look at the inflation and decide on the rate policy.
It is very easy to see the food inflation even though it is a supply side issue, sort of getting passed off to being a more generalized inflation for the Indian economy. And that is something that we really need to analyze and see what is the extent of pass-through, and hence the RBI would possibly not be in a position to reduce rates immediately.
The government has announced packages worth about 60,000 crores in the last 2 months for various states. More will follow with the drought situation. The loan waivers will come. So I don't think so on the fiscal side there's anything that the government has done to prune the deficit. I think with the 60,000 crore packages is getting worse. So at best case scenario is you remain where you are. Actually, if you ask me, central bank should be really walking up and tightening the situation, but they will not do that.
JP Morgan's Kalpana Morparia says that a small 25 basis point cut in interest rates will not be enough to change the sentiment and spur growth. She insists that the RBI should get proactive and slice the CRR significantly.
I think they definitely need to come down, and I think the tools that the Reserve Bank of India has, in addition to just the signaling of repo and reverse repo, is really the cash reserve ratio.
Yes.
India still has one of the highest cash reserve ratios of any country in the world. And once you bring down the cash reserve ratio, not only are you getting more liquidity into the system, but as you know, banks earn 0 interest rate on the cash reserve ratio. And if you reduce cash reserve ratio by 1 percentage point, you're adding 5,000 crores of profits to the bank, assuming they just lend in overnight money and not actually, and then it will be even higher than that.
Yeah.
Now, some of that is going to get translated into a low cost of funding. Some of that is going to get translated into the banks wanting to take more provisions, just to be prudent. So I would really hope that over the next several quarters, we see the cash reserve ratio come down to 3%, if not lower than that. Because that, to my mind, will be the big game changer, rather than a signaling of 25 basis points on the repo rate.
And which is mostly factored in. But, do you agree that the RBI's hands are tied, or do you think that may be a little
I don't see why they should be tied on reducing the cash reserve ratio. See, absolutely no reason why they should be tied.
Right.
And Reserve Bank of India has been a very proactive regulator. So wherever they felt that there is likely to be an asset bubble or a concern on an asset this thing, they've been very prescriptive in terms of the provisions that they hold. Right. So if for any reason they felt that someone's now going to just take this liquidity that has come into the 70,000 crores that's come into the system and just